Let's now move on to the exciting part of the top 10 stocks that you've requested. Remember that you answered yung question natin when you registered, and we asked you about the stocks you wanted to ask. And here we're going to talk about them one by one. So first, we have a stock called SMPH. April.
Okay. Fundamentally, we have no problems with this stock. In fact, the reason why it's, I think, stronger than all the other stocks is because it's the most defensive property stocks with 72% of income from malls. Okay, and another thing exciting about SM Prime is plans to reclaim in the Pasay and Parañaque area. So the cost to reclaim is 30,000+ per square meter, whereas the selling price right now is 150 to 200,000 per square meter. So potentially they could stand to make a lot of money from that, and profits are expected to grow by 14% this year, which is very good. The problem is, of course, the valuations. It's really priced to perfection. 34%, 34 times PE. Okay, it's the most expensive property stock that we have right now. Okay, and of course, there's still this execution risk on the reclamation project right now. They're not even starting on it. And another question that a lot of people ask them really is, yung online shopping.
Oo nga.
Diba sa ibang bansa kasi hindi na nagmo-mall mga tao. Online shopping na lang eh. So here, it's not yet a problem, but I think in a way they're responding quite well, because right now you go to the SM malls, you will see that it's more restaurants, more movies, less shops. You go there, it's a lifestyle mall now. No? So I think they're doing the right thing. But that said, what if the transition to online shopping is faster, diba? So we don't know. It's a potential threat.
Tingin ko, isa lang ang answer dyan, aircon eh, no? Mainit. Libre aircon. Anyways, Sir Juanes, care to comment about this stock?
All right, so, okay, we just pulled up some of these charts a while ago, so I'll just have a look. Well, SM Prime, as you can see from the picture, from the midpoint to the right side, it's had some degrees of pull downs and rallies and pull downs, but what was nice is that the last reaction it made a higher low. So roughly that's the one that you see in the latter portion, and prices managed to be able to make a push up. So I think that's quite decent. Again, I don't think it's going to be too much upside because you have a previous high or two previous highs to be able to contend with. So I think you're probably going to run to those ranges and get some selling from there. So just wait for prices to come back down closer to their maybe short or medium-term moving averages before you buy SM Prime. But at least fairly better than many of the others that I've seen so far.
Okay, all right. MPI, April?
Okay. It's one of the worst performing stocks for this year. I think it's due to uncertainty surrounding the toll road and water distribution businesses. Kasi di ba hindi sila makakuha ng rate increase eh. And our valuation models assume that they will get the price increases. And, but that said, we think the sell-off is really too much. At 4 peso 52 currently, MPI is a holding company, so it owns shares in the toll road, shares in Maynilad, but it owns shares in Meralco hospital business. But at 452, you don't pay for anything na as far as the toll roads in Maynilad are concerned. So it's free anyway. So in other words, the bad news is already priced in. Okay, so that's the good news about this stock. It's just so cheap. The problem is, well, the risk is that further delays in the resolution of the rate hike issues for the toll road and water distribution business. But otherwise, I think the bad news is priced in and the valuations are very attractive.
Okay.
Well, with regards to chart, I think I pointed this out earlier. It's going through a phase of accumulation, and we're just waiting for the tip off before it breaks out from that high side. So I'd be in the camp of gradually buying MPI now, right? I take advantage of the weakness. I don't think that's going to last so long anyway, so you might as well do it. And the repercussion will be like a Globe Telecom effect later on.
Next, we have FGen.
Okay, so ito, good news na to talaga.
Good news na,
Totoo.
finally.
I know that a lot of investors have this stock, but finally, I mean, it's actually in a much better position. Tapos na yung bad developments. Kasi the ERC finally approved its new plant's supply agreement with Meralco. So remember, I talked about in the past how people were worried that it had a new plant, but it couldn't sell the power because it didn't have a distribution facility anyway. So finally, nabenta na niya. So at least secure na yung earnings niya. And remember late last year, it sold its shares in EDC to a foreign player. And because of that, to Singaporean, no? So the free float of EDC is now down to 10.9%. And eventually, the free float requirement is going to be 20%. So for those investors who would like to participate in EDC, FGen might be your only way. So pag nauso na naman ng mga renewable energy, baka FGen will be the play for renewables. And valuations, it's only at 7.7 times PE. No? The only remaining concern is the execution of the LNG reclassification project. So what is this anyway? Because the plants of FGen are gas plants, so it needs gas. The Malampaya field is expected to be depleted by 2023, so it needs to import LNG from other countries, but it doesn't have the facility to do it yet, right now. So, of course, the worry is, will it be able to do it or not? So, at least on the positive side, as you mentioned earlier, it was able to raise quite a bit of money from the sale of EDC. So, our base case scenario is we assume that they will push through with the gas plant, and but the capacity utilization will be much less. So, I think our target price of 26 pesos is quite conservative for FGen.
Sir Juanes?
Okay. I only see very positive movements only in the short term, not yet in the medium and long term trend perspective for first gen. It still looks like it needs some time to be able to base out from this particular range, and it did come closer to that major downtrend line recently, closer to 1570, and it whipped down right away. So again, it still shows you that there are supply issues on the way up. So I think we might have to be a bit more defensive here until a much more considerable reversal condition has back. I do really hope that first gen is getting out of that state of affairs where a lot of these things happen to them. In fact, a couple of years ago, I went and I did a seminar, and I went to the province to go on to one of their power plants. And when I was doing a seminar, they had 2 brownouts while I was there. And they looked at me and they said, "Sir, we're so sorry. This has never happened before." I said, "Okay, it means it's me." Anyway, I really hope that they get out of this, because, you know, in the last few months, whenever a stock goes into some problem or something, I normally hear people ask me, "Oh my God, is it going to become another first gen?" And it's becoming a benchmark term, which I'm a little afraid. You know, when you get that thing, you want to pull out of that as fast as you can. So I hope they've been able to learn out of that.
Okay. Next, Jollibee Foods Corporation.
Okay, Jollibee, actually, we don't have any problems as far as sales are concerned. Sales are very strong, driven by strong same-store sales growth, and they continue to expand their number of branches. And the foreign operations are actually finally performing very well. The problem is, of course, it's vulnerable to higher inflation. Yun nga, mga rising chicken price, rising beef price. And, you know, if inflation is too high, people might opt not to eat in Jollibee. So, yeah, and valuations are a bit on the pricey side at 36 times PE. Okay, industry average is 25 times.
All right. Juanes?
All right. Well, clearly concerning for me was the big breakdown it broke down from, and you see that very big triangular pattern, it just cracked. And now it's trying to be able to rebound from them. So right now I'm only seeing a recovery back to that breakdown point, if at all. After it hits that, I'm sure it's going to whip itself back up, and it still needs to do a bottoming out process. And so I think for now, sell this first on rally and just wait for the next opportunity to be able to buy it back. With regards being overvalued, I think April history has shown us it has always been overvalued, and it continues to go up down the road. So wait for the base out and pick it up from there. And I think it should be able to do well over time.
So, sir, just a quick question because I'm also looking at this particular stock. What type of basing pattern are you looking at? So it went up.
More likely, this
so
is
you are
gonna, is the type that can retest the low or
Okay.
if not break it slightly.
All right. Okay. Next, we have PLDT. April?
Okay, so similar, it's quite similar to Globe. It's just more delayed. And yun nga, data revenues currently at 44% of total revenues as of 2017. Mas mababa kasi si Globe 50 plus na yan eh. So mas mauna talaga. And but the difference between Globe and PLDT is that PLDT has a niche on fixed line, yung fixed line data. Kasi it had a head start, therefore it has better infrastructure as far as mga home broadband and even mga businesses, the data business, data centers, all of that. So that's really where the growth is coming from. Yun nga, that's why, I mean, you know, the mobile business right now, it's lagging behind kasi kay Globe. That's 58% of revenues, which is why medyo it's lagging talaga. Which is why we prefer Globe. Valuation, it's reasonable, it's very cheap. 5.6 times EV EBITDA. And about the threat, again, we've said there's the third telco threat, but again, our feeling is it's going to be difficult for any new player to come in and compete aggressively and successfully with both PLDT and Globe.
Sir?
Well, I would I would take my profit into this rally first and wait for maybe a better basing pattern before this thing will probably turn around. But there's been a slight break in its downtrend line. At least that's a little good part. It's not that much over. And it didn't go through that accumulation pattern like I showed you earlier in Globe, right? So that's what's absent. It seems like people who bought this just bought it for the rally because because of the oversold or maybe discount it had, and then now they'll probably go through an unwind phase first. So wait for a consolidation before you can become too aggressive for that.
Okay. BDO.
Okay. This is actually a favorite of institutionals, even ourselves. It's the fastest and largest growing bank, and the recurring income base is very large, which is why people like it. Our issue is that valuation, we feel like it's fairly valued at 1.8 times price to book. And by the way, the company came out with disappointing earnings just this Friday. So we feel like there's, you can afford to wait as far as BDO is concerned.
Well, more likely so, but it looks like it's going through the accumulation phase right now. So I think not so heavy dips are anticipated for BDO. So if you want to be buying this gradually on the way down, that should be fine. But it looks like the worst is over. If we're lucky enough to be able to let that come back down to where the blue line is, I think you should really hands on back into that stock as much as you can. Because normally into the rebounds, this is one of the first banks that also resuscitate very quickly. So I'm quite favorable for this. Just buy it gradually over in time.
SM.
Okay, it's the largest Philippine conglomerate right now. And it's more of a retail play. It has 2,300 retail stores in the country. But it says that it feels like there's more room for it to grow because in the rural areas, a lot of transactions still happen in the informal channels, meaning the sari-sari stores. So they're banking on eventually people buying their products from an SM store. like a Save More or say a department store. Okay, and it's a beneficiary of the defensive nature of consumer spending in the Philippines, because consumer spending in the Philippines always grows consistently. But again, it's a valuation issue for us. It's just expensive, which is why we don't recommend it.
Sir?
All right. SM also broke out of a reactive channel, which is also quite healthy on its technicals. It did come up with a bit of a surge, so I'd also be inclined to buy this into a slight dip. But so far, it looks like the hard part is over. It'll probably just go to a little bit. Maybe it could even finish its rally and then whip down a little bit. And I think this should be a okay issue to be able to buy for the long term. I have no problem with this.
URC.
Okay, URC, unfortunately, we feel like profits from the local operations are no longer in a fast growth phase. I know that URC has been one of the more successful stocks during the past maybe 7, 10 years because of the popularity of C2 and the 3-in-1 coffee, the white coffee. But right now, the coffee business is suffering from intense competition from both Nescafe and Copico. Yeah. And the market is not growing, actually. So the two players are aggressively spending on marketing, grabbing market share away from URC. And the profits from that business is going down. And aside from that, yung C2, well, first of all, the excise tax on sugary drinks meant higher prices for C2, which in turn hurt demand. And not to mention, drinks like mga iced tea, may uso-uso yan eh. So right now, apparently, hindi na uso ang iced tea. No? Yeah, I don't know what's the new uso, but it's not iced tea. So demand is also being hurt. And again, it's being hurt by rising cost. Okay, so margins are not very good. Valuations for us not yet attractive enough. It's still trading at 27 times PE.
Yeah, so although we've seen a pretty decent rally as it is in URC, it has not even gone up to the 30% zone. I really think this is one of those that will more likely probably try to be able to create a consolidation pattern that might even come lower. So I think this one, not too strong as of yet, so I'd like to be on the neutral side. I really want to see what the next couple of weeks will do for this. But if the catalysts are not really too exciting yet, no need to be able to add too much on risk on this one. The other ones looks quite better as of the moment.
Okay. AGI.
Okay, AGI is actually a very attractive stock in terms of valuation. Because first of all, the subsidiaries are already cheap, including Mega World. No? Other subsidiaries are Emperador, Resorts World, RWM. So all three stocks are very cheap. But that said, AGI is even cheaper because it's trading at a 40% discount to the market-based net asset value. Ibig sabihin, market value mo yung RWM, Mega World, and Emperador, mas mura pa. Mas mura pa si AGI. 7.5 times PE, so really cheap. The problem is the reason why, for example, institutional investors are not excited about buying AGI is because the three major subsidiaries, which account for 93% of the net asset value, are already listed. So for them, wala namang dahilan bakit bibili nila yan. And not to mention the performance of Emperador and RWM are currently encountering challenges. So, you know, if I want to buy AGI, I want to buy Mega World directly. Yun yung issue namin.
Okay. Sir?
Well, again, it's one of the weaker looking stocks. It's flattening out, not even going up in terms of its rally, and to me that's a concern. So if I had the choice to be able to buy this rather than the Mega World, I clearly will go on the Mega World side. So this one has not tipped over. It hasn't even shown substance enough to be able to rebound as of yet. So I'll stay neutral to this, if not defensive.
Okay. Next stock, we have CHP.
Okay, so so again, the good news is it's
Alam na.
going to benefit from growing infrastructure spending and the stability of cement prices. And again, similar to Eagle, it has plans to increase production capacity to help profits grow. Pero the problem is, compared to the other cement companies, it pays huge royalties to the parent, and it's less efficient, it, which is why it actually has one of the lower return on equity relative to its peers. And of course, we all know yesterday it came out with disappointing earnings because of the taxes. I think people are a bit confused what's going on. Kasi like, the revenues are okay naman, pero what happened as far as taxes are concerned? Why are profits lost pa yata? Basta pangit. So yun, valuations are okay. It's not a problem. Yeah.
Sir?
Okay, so this is going through a pattern that is known as a rounding bottom. So first good news, at least bottom. Rounding means hindi pa tapos. That means it's in the process of doing that, and that you might get that wild cascade. Like, look what happened, a sharp rally, then sharp decline. And you'll normally see that type of condition as this materializes. My thinking is that you'll probably need the sector to show some improvement before this follows. So maybe the more efficient ones will move first, do you think? And so if the other ones can generate some upside, it might be able to pull this along with it. But looks like the worst is over for CHP. I take it from some of your responses that you've been there for a while, right? And so you've survived, so you might as well just wait it a little bit longer. Give yourself a pat on the back, for heaven's sakes. I wouldn't have survived that. Okay, see April, she's the only analyst I know who can say, oh, this company went through disappointing earnings, and she's smiling at the same time. Galing talaga ni April. But like she said, if the other one is more efficient, in fact, the pattern of Eagle looks actually
Better.
more crisp. We'll
Right.
probably get more decent movements there first before this one.
All right. Next stock, we have Cebu Pacific.
Okay, so Cebu has been sold down heavily, I think, because it's sensitive to rising oil price and the weak peso. So dollar-denominated expenses account for 65% of cost, while oil accounts for 40% of cost. But we feel like the current price already reflects the peso's current weakness, assuming that doesn't weak substantially further from this point, and oil doesn't go up. I think that's the major risk. If the peso weakens significantly and oil price continue to go up, then hindi pa rin. Pero if they stay where they're at, or reverse, then I think the valuation is okay na.
Did you do a sensitivity on this for oil?
Yeah,
Like for every
we're
dollar?
working on that, yeah, the sensitivity. But based on the current price, looks like it's already there.
Well, I sure hope it's already there, because it's been already there, then already there, then already. Konti na lang siguro. Tiyaga na lang konti. No, the worry really here is oil, because if 40%? Yeah, if it's 40%, then if the trend of oil continues, as we showed you earlier on, that will continue to remain a headwind for Cebu Air. And unless we see a breakdown from that trend, this guy might really just stay on the defensive side for now. Although I have seen volume improve in this first rally, but the rally, the breadth of the rally was actually very small. That's not a good sign. But the volume means it might take some time before this thing can come around to reverse itself.
All right. All right, next now.
Okay, I know Juanes has talked about this. Like fundamentally, what do we think? Actually, the reason why I have something to say about this is because yun na nga, it's so popular. This is one of the examples that I use when I do fundamental analysis seminars. Kasi, ayan, biglang nakinig lahat ng tao, di ba? So,
They're asking, April, anong tip mo
so
sa
yeah.
now?
Hindi, kasi this one, I think the reason why people are excited about it is because it's a potential third telco player. But, you know, realistically speaking, market cap is 14 billion. Net income last year, 6.8 million. Okay, so according to the terms of reference of the government, if you want to be a third telco, you need 40 billion in capex for the next 5 years committed. So I don't think, you know, if you are earning 7 million a year, you can afford to do that. It's gonna be very difficult. And in fact, dapat nga bentahin nyo pa yan kung nanalo siya ng third telco license eh. Because I think it's gonna be difficult for the third telco when it comes in. It's not gonna make money in the first how many years. It's gonna be very difficult for the third telco. So yeah, it's a very speculative play, I think.
All right.
I'll just say something.
Sige.
Again, as a standard process, if you guys are going to go after speculative stocks, okay, typical of what I showed you earlier, normally when these rumors or news about the stock come in, you will see the first surge. It's very normal because everybody gets excited about the news and that there could be a potential change into the company. But now, taking what April just said, but remember, it takes time for that reality to generate the revenue and earnings. Okay, so if that's going to require a transition time of 2 or 3 years along the way, okay, so once you get the shoot up and they announce whoever wins, okay, execution time, how long will it take you to generate money? What do you think will happen to their stock price in that period? Go up? Worse, right? So please prepare yourself. So I know some of you go, oh my God, third telco. You might be there for a while. So just know what you're doing. So if you feel you're going to do that for long term, I guess you can take your chance on it. But I would rather, if you're a trader, trade the speculation. The minute that ends, you get your sell triggers, get out first, and wait for the fundamentals to back you up because that may take a period of time before it happens.
Okay. Next one. Sir, I think April already covered this. So.
Okay, so Ayala Corporation has actually done well, at least with this recovery. At least it's managed to rally back to the previous high it made. That's also a good sign. So this is one of those that I think might, after the reaction, might just consolidate this way. More likely may not come all the way back down to the blue area. So this one probably tighten up a pattern along the way. Maybe, I hope flat, another flat consolidation, and eventually try to work its up later. So I think this one you can hold or buy it into some dips into support.
Okay. Next one, Sir Juanes.
Ayala Land, not as nice as Ayala Core, but coming along the same path. I hope it can rally all the way up to where that red horizontal line is. But if it cannot, then I would also anticipate that this can still do a double test, unfortunately. And I'm also like that with most properties because the threat of interest rates is still there. So you may get a whip back here. So not so aggressive. Always buy this on the dips or in the basing out conditions, and not into that rush that you see today.
Okay. Metrobank.
Okay, so, well, again, it's made a rally. It's very cheap, as April says, but the technicals are not as strong as BDO, not as strong as BPI, not as strong as Security Bank. The others seem to be stronger. So I think it went through a major sellout in terms of foreign exit funds, right? So I think it might take some time because if you were able to buy all those shares at this low and it goes up maybe 3 or 5%, those guys I think would be happy enough to take some profits and wait for a pullback for the movement in Metrobank. I think more intensification will come after the downtrend line is broken.
All right. SEC, Sir Juanes.
All right, Semirara shows a clear reversal to condition already. But if you notice, I've drawn an upward channel. We hit the high end of that channel, so wait for prices to come back towards the blue line. That might be a better entry for Semirara. But at least the trend reversal is clear to me.